Hi, my name is Kelly and I'm with the Texas Department of Insurance, Division of Workers' Compensation. Income benefits replace some of the money you lost because of your work-related injury or illness. Each kind of benefit is calculated a little differently. The amount of benefits you get is based on what's called the average weekly wage. The average weekly wage is the average amount of money that your employer said you got each week from your work in the 13 weeks before you were injured. The first income benefit that an injured employee might be able to get is temporary income benefits. You are able to get these income benefits when you have lost money from a job for more than 7 days because of your work injury. These benefits equal to 70 or 75% of what you were paid each week before your injury, depending on what you were paid an hour. So, if your average weekly wage was $500 and you lost all your income because of your injury, your total lost wages would be $500. Your temporary income benefits would be $350 a week. That's because 70% of $500 is $350. The next kind of income benefit that you could be able to get is impairment income benefits. These benefits are paid if you have permanent damage to your body because of your injury. The impairment income benefits will be 70% of the money you were paid each week before your injury. These benefits do not depend on whether you are able to work. In fact, you could get these benefits even if you have gone back to work. They are based on the amount of permanent damage that was done to your body. Once a doctor examines you and finds that no further healing from your injury is expected, the doctor may give you an impairment rating. This is a percentage of permanent physical damage done to your whole body because of your injury. For each percentage point of your impairment rating, you get 3 weeks of impairment income benefits. For example, if you were paid $500 a week before your injury, 70% of that is $350. The doctor gave you a 1% rating, then you would get paid $350 for 3 weeks. If you get a 2% rating, then you could get those benefits for 6 weeks. If you get a 3% rating, you get the benefits for 9 weeks. Basically, you take the impairment rating and multiply it by 3 to find out how many weeks you could get impairment income benefits. The next kind of income benefit you could get once impairment income benefits end is supplemental income benefits. These benefits are equal to 80% of the difference between 80% of what you got each week from your job before your injury and what you get paid now. Let's say you were paid $500 a week before your injury, but after your injury, you aren't earning anything. You would receive 80% of $500 or $400 a week, and 80% of that is $320 a week. If you are earning some income, but it's less than 80% of what you were earning before your injury, then the insurance company can pay supplemental income benefits at 80% of that difference. So if you were paid $500 each week before your injury, 80% of $500 equals $400, minus what you were able to earn now, which is $200. $400 minus $200 is $200, and 80% of $200 is $160 a week. The last income benefit that you could get is lifetime income benefits. You are able to get these benefits if you have certain very serious injuries. These benefits can be paid weekly or monthly. The benefits are 75% of what you made each week before your injury, with a 3% cost of living increase for each year. So if you were earning $500 a week before your injury, 75% of $500 is $375 a week. For more information on benefits, go to tdi.texas.gov/WC/employee or call our customer service number for more information at 800-252-7031 option 1.